Greetings and salutations, and welcome back. This is the Northern Miner Podcast, and I'm your host, Matthew Keevil, coming to you the week of October 3rd. And we are once again brought to you by our friends at the Yukon Mining Alliance. Please do surf by the Yukon Mining Alliance website and check out all the exciting mineral activity that's going on in the territory. Have an exciting show lined up here. We will be dropping into Lesley's Geology Corner. We have a really cool segment this week. Loyal readers will know if you got a subscription. Last week we had our Quebec special come out in print. And one of the things Lesley always does is we look at the geology of different regions. And so we're going to dig into Quebec gold deposits a little bit today. Talk about Canadian Malartic, Osisko, Falco, Sigma Lamaque, which is with Integra now, and dig into orogenics, greenstones, some cool gold deposit stuff. Lesley's going to lay it all out for you, do a little bit of comparative cross deposit kind of discussion on different gold mineralizations in the province and stuff like that. So that's going to be really fun. We'll hop in over to that pretty soon, but first, I just want to run through a few, economic things that are making headlines over the last week and could be affecting our commodity prices. People may have noticed gold was on a bit of a downward trend last week, close at about $13.15 an ounce. That was largely driven by actually, people will probably be following along the Deutsche Bank, big German bank issue. There was some questions around solvency, whether they were, once again, mortgages reared their ugly head in this scenario. But Agence France Presse reported on Friday that the German lender is nearing a pact to pay the U.S. Department of Justice $5.4 billion. Now, that might sound like a lot, but that's less than half the initial amount requested by the U.S. Department of Justice to settle a probe related to, you guessed it, bad mortgages. The bank is also reportedly poised to reach an agreement with labor representatives to cut jobs. So they think it might not be too bad. So we won't have the failure of a large European bank, which is great. It's great news. But that's one of the reasons. That's sort of, markets were sort of weighing that against British PM, the new Prime Minister in Britain, following the Brexit vote. Theresa May pledged to start pulling the UK out of the EU by March of next year. So markets are kind of balancing the good macroeconomic news, maybe Deutsche Bank's in better health than expected versus what's going on with Brexit, which has always been just a huge uncertainty for us. So that's one of the reasons gold was down a little bit. Things aren't looking too volatile macroeconomic wise. So, and some of the U.S. numbers came out recently with the payrolls were a little bit better than expected, or at least neutral. It's like we can expect things to be neutral's good. Yeah, we don't want surprises. So gold was at $13.15 roughly per ounce at the time of recording. Silver was at $18.92 per ounce, and copper, which has bounced back on just some little whisperings that we've heard that the Chinese economy might be not just performing well, but they've also been looking at sort of controlling their mineral extraction industries a little bit more. This will factor into something on met coal that we're going to discuss shortly, because metallurgical coal has been bouncing back on some moves out of China, but we will talk about that a little bit as we move forward here. West Texas Intermediate crude oil was at $49.35 per barrel at the time of recording. There is the whispers out there again also of the OPEC deal, possibly Russia and Saudi Arabia signing on to deal with this oversupply issue. So we don't know exactly any sort of firm details on that, but that is out there, and that is sort of, given oil a little bit bounced off the $44 to $40 range up closer to 50. So it's something to follow along with. If you're looking for some macroeconomic news, there's lots of stuff out there on that. So I'd highly recommend reading up on the oil. I know we're a mining show, but follow that too. It's really interesting stuff. So before we get into Lesley's Geology Corner, which I'm super excited about, I actually want to chat a little bit about the metallurgical coal stuff because it's pretty interesting. It also obviously has a huge bearing on Teck Resources, which Vancouver-based has a lot of exposure to metallurgical coal in BC. But what we've seen, and our editor-in-chief John Cumming actually wrote a nice editorial on this, and we've discussed it, touched on a little bit on the podcast previously, is that we've seen a significant bounce in seaborne met coal, up to around US $210 per ton, and that's compared to $102 per ton in July. So we're talking about like people are like, whoa, this is to a degree unexpected. I don't think anyone really was predicting a large bounce back in metallurgical coal. And it's just a question around supply security. And so one of the things that we've been talking about is that this is a lot to do with China's National Development and Reform Commission. And one of the things that came out recently was that they've bowed to pressure and agreed to relax a current 276-day working limit for coal mines coming up for the fourth quarter because they want to meet demand for upcoming winter season and put a cap on rising domestic prices. So this is back in April. The Chinese government imposed this limit on coal mines as part of what they're calling supply side reforms, which serve to reduce year-to-date production by around 10%. So what's happening here is this is more actually thermal coal related, but people took it as a potential met coal impact as well. So what we're talking about here is the China's National Development and Reform Commission, the NDRC. And it's just they just want to make sure there's enough heating for the winter. They're like, oh, it might have been too stringent cut back on domestic production, etc. Right? But one of the things that analysts noted is the NDRC, so China's Reform Commission, put out sort of a news release. But one of the analysts noted that there's not a lot of mention of met coal in here. So sort of the moral of the story here that we're talking around is that there was an indication that maybe they might be easing a restraint on met coal, seaborne met coal, as well as thermal, but we don't have actual official word of that. There is talk of easing the 276-day working limit for thermal, but we have not heard yet whether China will be doing this for both metallurgical and thermal coal. So there might have been a bit of an overreaction on seaborne met coal prices based on some of the news releases that are coming out of China. But it's just interesting to follow along because it has been such a hot topic recently, and there are it has quite an impact for us on the west coast of Canada, as far as job creation and stuff, because there is some latent metallurgical coal potential, not to mention thermal as well. But in some of the south central BC coal basins, if prices remain more firm up in both regards, we could see more reactivations of projects, etc., maybe a few more jobs created. So it's something we just like to follow along and all that, just keep everybody up to date on. But it's interesting especially from a macroeconomic perspective. And as always, we'll keep our eye on China and what the news releases are. It's a unique regime, so we do what we can with them. But without further ado, let's get into we
are powering forward with yet another
and we're going to talk Quebec. I won't spoil it.
And this week,
I'll let you get right into it, and then I'll be back on the flip side to talk a little bit of gold,
because we did just have our Quebec special came out. There's some really nice stuff in there on Osisko Mining and a few other companies that are very active in Quebec. And Lesley did, as usual, her big geology roundup of the province.
Yeah.
Which we want to talk about this, though. One of the issues we were talking about is geology doesn't really follow national borders too well.
Definitely doesn't. It doesn't.
So as you're moving along here doing province to province, you said to me that sometimes you see a little bit of overlap as the...
especially on the East Coast.
Yeah. The geological provinces don't necessarily line up with the territorial provinces, as they say. So, but Quebec's interesting because it's very hot right now. We've seen companies drilling a lot of meterage there this year.
So many meters.
Integra, as always, is absolutely going crazy with the drill bit at
Osisko Mining, 150.
Yeah, Osisko. Falco's drilled quite a bit at the Horn deposit. I think. Yeah, Sirius Resources at the Chichu deposit, which is near Goldcorp's Eleonore. So yeah, there's absolutely, I'm sure we're missing about 15 companies too that are drilling at least 5,000 meters this year. So let's just dig right into it. So this is Lesley's Geology Corner, and we're going to talk Quebec.
Yes, we are. I love talking geology. It's so cool. So yeah, if you haven't checked out this Quebec Geology Metal Districts article that I did, check it out, because seriously, there's nothing out there quite like it. I spent a lot of time researching, figuring out what to go in it, what not to miss. And so yeah, check it out. Absolutely. So I think that whenever I do up these articles, there's certain themes that stand out for me. that I just think to myself, oh gosh, that's really interesting. I've never really considered that or delved deeper into this thought. And sometimes I can't really write about it because it's a little bit more of a
really scientific.
Yeah. Or really scientific, or just a really cool observation, something creative. And so I thought that I'd dedicate this week's Geology Corner to talking about Archean porphyries.
Okay. I didn't even know that was a thing, to be honest.
It is.
And this is you mentioned to me before we went on air. I was cheating here, but Canadian Malartic is an example of
well, I'll get right into that. So, I mean, realistically, most economic porphyries tend to be Jurassic or younger. So about 200 million years ago to like maybe 30 million years, even younger. So that's generally how most porphyries fall into. But Archean porphyry systems, can date back 3.75 billion years to 2.5 billion years ago. It's a super controversial, deposit type.
Okay, so this is like a moving target site. There's some different arguments.
Oh, yes.
People don't necessarily agree.
To the point where people often skirt around the word Archean porphyry, and a perfect example is Osisko Mining at its Canadian Malartic, right?
Yeah, now Yamana Agnico joint venture.
That's right.
Yeah.
And so they have about 5.2 million ounces production in that district alone, and this deposit has like 10 million ounces of gold in the resource. And if you go to their website, they say that the deposit is, quote unquote, a large tonnage, low grade, widely disseminated gold-bearing pyrite within porphyritic felsic to intermediate intrusions and altered metasediments, which is basically as close as you can get to saying the word porphyry without having to say it. And
these are fully gold porphyries then. There's not much copper. Not that much copper in them.
I have no idea why. Somebody else who's listening probably knows. No, I know. But I can't get into that. So the reason why they're so disputed is because these rocks, they're so friggin' old. Can I say friggin' on here?
Oh yeah.
Okay, cool. So they're just so old and they're too deformed to pin down the nuances seen in the mineralization and the alteration. And most of the time you can't even tell what the original rock type was, because it's just been multiple stages of deposits, pulsing through it. These rocks have been pushed down deep below the Earth's crust only to be exhumed and re-metamorphosed, and you name it. These are really complicated rocks. So, you get a bunch of geologists in the room talking about Archean porphyry deposits, and guaranteed someone is going to get a face full of beer in the face.
Or just disagree they exist entirely. Is there a debate on what? Because why wouldn't they use the word in the description of the deposit?
I think it's just because it's so difficult, right, to pin it down. So I get it, and it's kind of funny. Yeah. But regardless, there's several styles of intrusive hosted Archean systems.
Okay.
And they're super diverse. Obviously, the standout example is Boddington in the Yilgarn, which is 26 million ounces past production.
Yep.
And that has a bunch of different styles of mineralization. So again, it's been disputed whether it's a porphyry system, whether it's orogenic, whether it's that. It's probably a mixed mash of all of it. Who really knows?
Now I have a quick question here just to intercede.
Yeah.
I found it interesting when I talked to John Brzezinski, who was with the original Osisko and is now the CEO of the new Osisko. One of the things he said was that when they came back, oh gosh, when did they do that deal? Probably 7-8 years ago. They came to Canada with a geological map. And he said they came back and they went to these old camps, because these were mined historically. A lot of these places had historic high-grade mines, but they came back to look for lower-grade, large-scale gold deposits, right?
Pyrite disseminated.
Yeah, so maybe Osisko is specifically targeting these type of deposits. But my question is where would the high grade have been that was mined historically? There would have been a core, or what's the relationship between the disseminated gold, say the lower grade stuff, and what the old timers would have mined in Quebec back in the on vein, I guess.
Yeah, they would have had the veins, because these intrusive host deposits, it's a variety. So you can have everything's disseminated pyrite and the gold and pyrite.
Yep.
Or you can have this intrusive that's been stockworked of veins and stuff, and so it's all kind of within a big, larger disseminated shell.
I see. Okay, so that's what they call the halo,
that's
right?
Cross-cut by shear zones, which can be mineralized.
Yeah.
So again, could be multiple different styles of deposits.
That's why they have to drill 100,000 meters.
Yeah.
On these things, because I think it was Richmont Mines that reported their drill program in kilometers. Did we talk about this?
Oh yeah.
They were we were drilling 1.5 kilometers, and I was like, holy smokes, who reports their drill program in kilometers? And I'm like, that's pretty funny. But yeah, these things do take
It'd be cool.
take a
Start
beating
using,
with the drill
We're
bit.
doing a half marathon of drilling this year, or
Mhm,
doing a full
yeah.
marathon.
Yeah, exactly. We'll start. We're
going
doing a
for
lot.
Sun run
And
here,
the-
everyone, 10 kilometers.
The guy who funded it's like, oh god.
Right.
So you also the thing Osisko's working on now is Windfall.
Yeah, I really wanted to mention Windfall because, again, thinking about the context of Archean porphyries, Canadian Malartic, what Osisko Mining did for Canadian Malartic, and how they're suddenly doing it again at Windfall.
Mm-hmm.
Now, Trish, our writer in Toronto, wrote an excellent article. She's such a good writer, hey?
Yeah.
Trish is amazing. So, well, everyone's amazing. But anyway, so she wrote this fantastic article about Osisko Mining at their urban berry property, the Windfall deposit, which they say is going to be might be a company maker.
That's a good branding term.
Which it is.
Yeah.
And same thing they did with Canadian Malartic. That was a company maker. And then so now they're suddenly doing it again. Now Windfall is crazy because, when you look at the Abitibi and all the greenstone belts north of there, they all fall along those regional suture zones, right?
Mm-hmm.
So Cadillac, Larder Lake, suture zone, there's so many deposits. There's Val-d'Or, there's Canadian Malartic, you name it. And then you go up north along these other trending fault lines, there's other deposits like Timmins.
Yeah.
And when you go up north, you have this unnamed suture zone on most company presentations because there hasn't been anything significant found there yet. And that happens to be where Windfall is. And so I just thought it was really neat because there they have this team of geologists who came into the Abitibi and came up with this new, kind of newish or re-emerged this deposit style. And then created basically had the Canadian Malartic that came out of that idea. And now they flushed out into the rest of the belts.
Yeah.
And they're finding the same thing.
The similar mineralization, yeah.
Right?
And interesting, just to note, Osisko didn't actually discover this.
No.
They acquired it through a business merger, I think during their big spat of mergers when they acquired a lot of, maybe 4 or 5 companies. One of the ones they picked up was Eagle Hill Exploration, I believe. But they had already got Windfall to, I think, preliminary economic assessment stage when they were taken out by Osisko. And this is quite an interesting commentary on the market over the last, let's say 2 years, because this deposit that was, well on its way to being delineated and moved towards feasibility, etc.
Yeah.
The bottom fell out so bad that Oban, now Osisko, picked it up for not a whole lot, and now it's a company builder.
Yeah,
yeah, there you go.
Yeah.
That's how this, and it could change pretty quick. So it's
well,
funny
they
to
say that Windfall might have even up to 3 million ounce gold.
Yeah.
And they think it's going to become a whole new district. They say the geology is similar to Malartic.
Mm-hmm.
I went on their company presentation, and it was really neat because they had all these pictures of rocks and age dates and stuff, and really pushing this concept of more of an intrusive, related sort of mineralization rather than your traditional shear-hosted stockwork gold.
Yeah.
Kind of like what you see down at Integra's property, right?
Yeah, yeah.
And so they said it's like the mineralization there is in these large pyritic stockworks. It's in shear zones. It's in crustiform veins and tension veins. But they say that the gold is associated with a 2.7 billion year old porphyry dikes.
Okay.
They found that there's a 21 million year difference between the volcanics, so the volcanoes that spew to create these greenstone belts, and these cross-cutting porphyry dikes with the gold. And that is similar to the other mining camps that you even see down in Val-d'Or.
Okay.
So again, I'm just kind of holding my hands here when it comes to this, and I'm just oh my God, what is all this anymore, right? When it comes to orogenic gold systems that we do see in the district.
Mm-hmm.
But it's neat to see a group of people who are taking this idea and then they're redeveloping their exploration targeting around this concept, and they're proving it to be the case, right? They're finding things that are meaningful. And I think that's what really stood out for me. If there was a take-home message of this Geology Corner, right? If there was, this is it. So listen, wake up and listen back. So I kind of like calling it I like to coin it as a yellow car effect. Have you ever walked outside and seen a yellow car, and you're like, whoa, I've never seen a yellow car before in my whole life. And then suddenly that day you see them every single 10 minutes. You're like, what's happening here? I'm being taken over.
I always find that when I buy a new car,
you see the same.
I'm like, oh, nobody has this car, and then I go out and there's like 18 of them driving around, and I'm like, Jesus.
And
But
I feel like that happens in geology.
Mm-hmm.
If you take a district and you come up with a new idea and you actually like prove it to be the case and find something meaningful, just like Osisko Mining had at Canadian Malartic, they're gonna find others like it. They've got basically full range of a belt because everybody keeps to the textbook style of mineralization, like orogenic systems. They're going to go look for orogenic systems like quartz veins and shear zones, et cetera, et cetera.
Yeah.
And so they might kind of have the blinders on. They might not see all those yellow cars driving around all over the place. And Osisko Mining are just really tapping into that. So I think that for any investor, they can always say, okay, who are the team of geos that are working on the project? What have they found before? Is it different? And can we expect them to find something else similar like it again? And a company maker like Canadian Malartic and now potentially Windfall, I mean, I guess in that particular scenario, Osisko Mining could be proving themselves again.
Now, interestingly, like you said, it's kind of a new exploration model or a new deposit model with which to explore, right?
Yeah, maybe new-ish. It's around. They've known that the people have known that these deposits occur in the Abitibi and other Archean belts. But they stick to the textbook style, right? Yeah. They just keep rather looking for the other thing than finding something new. Maybe it's more work. I don't really know.
How would it compare to maybe some deposits that listeners are also familiar with in Quebec, like let's say Eleonore with Goldcorp or Lamaque?
No, they're all mixed in. It's really crazy.
But it's the similar, like these are. Do you think they're all these?
No. They're all going to be different. This again is Archean system, so these rocks have just seen so much. They've just been, train wreck after train wreck after train wreck. And so it's kind of like everything's get masked. Like you have Eleonore, for example, a sediment-hosted disseminated style orogenic system.
Okay.
You have like Lamaque, and Sigma, which is there's a bunch of dikes cutting through it. So, I mean, that's clearly shear hosted as well, but again, it has stockworks, it has things that kind of fell into this intrusive that was banged up from all the deformation. Yeah. So there's these intrusive hosted or intrusive style sort of mineralized zones occur all throughout Quebec, even like Hemlo.
Yeah, Hemlo,
right? Could be a perfect example as well. That's been argued that could have like a bit of a porphyry stem. So it happens, but again, it's a contentious subject.
Got angry geologists.
And but at the end of the day, Canadian Malartic is Canadian Malartic, and Windfall. Let's see what happens out of that. And the team there seems to be really kind of pushing this deposit model and coming up with some great ideas out of it. So.
And we should also mention Quebec is also one of the best places to work because of the government support and the super flow through. And anytime you talk to any of these companies that work there, they can't say enough about the political support they receive from mining in the province. So that it's and also the Quebec, the government-backed funds are really supportive of. Yeah, totally. In terms like they did a lot with Stornoway and put a couple $100 million in. The government-backed funds did, and I mean, so that's why you see a lot. And I mean, when it comes down to it, with the tax rebates, you can drill. It's cheap and the access. Same with Ontario. Yeah, so it's interesting. So that is great. I'm super happy.
Corner, everybody.
So if you're going to invest money in Quebec, take a look at Lesley's geology piece so that you can get buffed up on.
You won't find anything like it out there.
Yeah. So
if there was, then I wouldn't have written it.
We're breaking ground here at the Northern Mire.
Totally.
So that's in this week's issue. Should be on newsstands tomorrow by the latest. So do pick that up, or if you do get a direct subscription, look forward to that. Do check it out. And again, if you do want to subscribe, please surf by our website. It's a great bargain. Just click the little subscribe button. I think it's in the top left-hand corner, but do please subscribe. And this has been Lesley's Geology Corner.
And welcome back to studio. I love those because it gives everybody sort of like a toolbox when you're looking at specific companies or jurisdictions, rock types, drill holes. Lesley's can kind of give you a little bit of point of reference so that when people are out there tackling some of the more technical terminology, the colloquialisms we come across in this business, you have a little bit of ammunition to do a little bit of your own judgment on what you're looking at. And we will be taking, one of the things I wanted to point out is that we will be taking some listener feedback feedback and questions for Geology Corner and some of the other special segments we will have coming up shortly. As I always say, the podcast is constantly evolving. But feel free to hop on Twitter. Leslie's at Northern Geo, and I am at Matthew Keevil. And feel free to fire us off some questions or inquiries on specific companies or drill holes or deposit types. And we can always dig into it on air, and Lesley can kind of break down some of the more opaque geological terminology you might run into. So that's sort of what we're aiming for, and that's going to be a weekly feature moving forward, so I'm excited about that. And now one thing I wanted to touch on was, before we depart for the week, was that there wasn't a bit of gold merger and acquisition activity last week that deserves a little bit of discussion, I think. And this was between Kirkland Lake Gold, which is sort of a Ontario Abitibi-based company with the Macassa mine complex, and then Newmarket Gold, which is actually, again, an underground miner, so they're both underground miners, but Newmarket was a vehicle that was sort of, Lucas Lundin was involved. Ross Beatty was actually involved with both of these companies, but they bought a company called Crocodile Gold for, I think it was just north of 180 million, about 185 million in mid 2015, and they ended up picking up about 3 mines and some exploration prospects in Australia. So this one's interesting because this is a reverse takeover. So what's happening is Kirkland Lake's actually exchanging its shares for Newmarket shares, but will end up with an ownership of the new company. So Kirkland Lake shares will be exchanged for 2.1053 Newmarket shares. So when all said and done, Kirkland Lake shareholders will end up owning 57% of the combined company. They will be taking the Kirkland Lake name. And from what I gathered from the conference call and press release, the management will be predominantly made up of Kirkland Lake executives, short of they're keeping, I would imagine, the mining team in Australia. And this is interesting. It's the equity valuation on this puppy is about $1 billion. The combined market cap will be about $2.4 billion, and they're going to move from about 200,000 ounce producers each to 500,000, so 500,000 ounces in annual gold production. So sort of trying to ration it up into the intermediate gold producer kind of range, right? And so people will be familiar with Kirkland Lake. As I mentioned, they have the Macassa complex and the Taylor mines in northern Ontario. And the big mine for Newmarket is the Fosterville mine, where they recently had some really interesting looking drill intercepts at targets called the Harrier South and Lower Phoenix targets at their Fosterville mine. So some of the analysts thought that this was sort of driven because Newmarket hit some pretty impressive looking intercepts recently, and Kirkland Lake's been looking to expand. A lot of the analysts that I read and spoke to expressed a little bit of surprise because Kirkland Lake is an Ontario miner, well versed in underground mining on the Abitibi. But they are merging with a company that's solely Australian, really. So it's sort of across the world. But one of the things that Tony McCooch, who's president and CEO of Kirkland Lake, one of the points he made was, hey, the corporate cultures are similar. Ross Beatty's executive chairman. And also that they're both underground miners with their own skill sets, and they can work on synergies and stuff like that. So it's interesting. I mean, like I said, some of the impressions I got from analysts are they thought that Kirkland Lake had previously bought St. Andrew's Goldfield to pick up the Taylor mine. They thought maybe they would just continue to sort of, consolidate that area along the Porcupine Death Store Fault, where they've been really quite active and are obviously very familiar with their technical team. But they decided that, hey, we can do 2 really good jurisdictions, Australia and Canada, and we can boost production 500,000 ounces a year. So it's an interesting one. I mean, from a point of view, I mean, again, we talked about at the onset, there wasn't a cash component here. This is once again an all-share deal. But it's interesting that we're starting to see some of these, I wouldn't call them juniors, but smaller scale gold producers merging once again to create more of a mid-tier or intermediate. And then it'll be interesting to see moving forward the free cash flow, see what sort of firepower they're going to have when these mines start going. Because the Fosterville operation in Australia, I have a sneaking suspicion the average head grades may be going up there based on some of the discoveries that they made on the project to date. And then, I mean, as we all know, the Death Store Porcupine Fault in Ontario is prolific. And So it's always interesting to see what Kirkland Lake's been doing at the drill bit there as well. So one of the things that they really made a point of stressing during the conference call is that all the projects that they currently have are underground mines in district scale camps. And so I'm assuming some of the things they're hoping is that A, the free cash flow goes up, and B, their ability to raise is going to go up as well. More than likely, the debt capacities, etc., will be higher. And that will allow them to put more money into the ground. And that's one of the interesting things that we've talked about. Lesley and I discussed, I think, last week, is that there is a lot of talk about the need to ramp up exploration. And because, as we all know, over the past 5 years, there's been a real dearth of quality drilling just because the equity markets have not been cooperative. So now that everybody's looking again, and the majors have been in cost-cutting mode, they've been, and one of the first things to go is always the exploration programs. So there's going to be one of the things that I talked about recently, and this sort of works along a similar vein, is that I was on the major drilling conference call recently, and they were talking about how they think there's going to be an uptick in demand for drills. And that's coming from both the major side, and they said there hadn't really seen a trickle down yet from the junior side, but they did note the uptick in financings over the first half of the year. So it'll be interesting to see as the people get going on some of these drill programs at some of these relatively brownfield sites. I mean, we spoke a little bit about opportunities possibly stemming from majors being really obsessed with near mine exploration, and whether some of these non-core assets might end up in the hands of juniors. Where this exploration money is going to go, is it still going to be strictly focused on near mine stuff? So it's interesting things, and I mean that's one of the points that Kirkland Lake and Newmarket stresses, that they have these sort of district potentials in these operations that they can expand. And so you hear this terminology about organic growth again, in-house growth, so it's an interesting one. And I mean, from a valuation perspective, I mean, it's interesting that two companies so far apart geographically. It'll be interesting to see how it works. I mean, from a synergy point of view, as we said, it was about a $1 billion equity valuation. So, so $2.4 billion pro forma market cap when they're combined would be the concept. So interesting stuff. I mean, I wrote a bit of an article on it with some comments from Douglas Forrester, who's president and CEO of Newmarket, and from Tony McCooch, who is president and CEO of Kirkland Lake. So do surf by and give that a gander. And once again, I'd like to thank our sponsor, the Yukon Mining Alliance. Please do surf by and check out the Yukon Mining Alliance website and all the great companies that are members. And one of the things that came across my desk, actually, from my Yukon files, as I call them, is that Western Copper and Gold, it was the casino project. I believe this was on September 23rd, so about a week ago. They signed a memorandum of understanding to supply their mine with liquefied natural gas, with Calgary-based ferrous natural gas fuels. So they plan to build a two-phase LNG plant in Fort Nelson, British Columbia, to supply the Casino Copper and Gold mine starting in 2020 and the Selwyn Lead Zinc mine starting in 2022. So we've heard a lot of buzz about the prospects for LNG in the Yukon. And one of the things Ferris said was, as long as there's road access, we can deliver LNG anywhere. And this offers a sort of new solution for mining companies that are building projects of size. So Western Copper and Gold obviously has the Casino, which is a large-scale copper-gold porphyry project. And Paul Westsells, president and CEO of Western Copper, said that they need a backbone of firm energy, just to, it helps with economics, and it helps with, scale. When it comes to scale. So it's an interesting element, and we've been following the LNG story along. When we were up there, I believe last summer, they had recently unveiled the LNG plant in Whitehorse. And so it's just an interesting thing going on, and it gives mining companies a sort of new look on that infrastructure challenge. And so when it comes to the territories and northern jurisdictions, it's always interesting to see how this LNG idea is going to sort of evolve as we move forward here. So that's always cool. So do surf by, check out the Western Copper and Gold website for their casino project, which is currently moving through environmental regulations. So do keep an eye on that one. And that's our show. So thanks again so much for joining us. We do appreciate the listenership. And this has been Matthew Keevil with the Northern Miner Podcast, and I'll talk to you next week.